Before we begin, we'd like to remind you that forex trading involves significant risk of loss and is not suitable for all investors. Please pause the screen and read the full disclosure. Thank you.
Okay, equities markets. Dow and S&P have continued to be very weak this week. Today alone, the Dow was down 2.61 to 10,002. S&P was down 3.11 today to 1063. I mean, those are enormous moves for equities markets. And today was a story of, once again, we had earlier in the week, people were, there's whisper numbers that the job situation is improving and we're going to see a big positive number this week on the NFP. There was some question about whether or not the equities, they kind of found a little bit, the S&P was toying around with 1100, kind of back and forth across it. The global growth story had kind of crept up again. People believed that Greece was going to come out with its numbers and everybody was going to say, oh yeah, those are great numbers. We're totally solid on the idea that you're going to be able to hit all those numbers. And whew, boy, we really dodged the bullet on that one. Today, I think the wheels came off that cart. Trichet didn't really support the idea that things were completely contained, even though the commission rubber stamped things. There was enough reading between the lines there to say that Greece is anything but out of the woods, and Spain and Portugal blowing up as well. I mean, the FTSE sold off 2.17% today. The European stocks didn't have a great day. The global growth story today really took on a lot of baggage, and the equities markets reacted. Maybe they overreacted to the downside. There's still whisper numbers of an NFP number that's going to be, I think the worst I've heard is maybe minus 15, and the most optimistic I've heard was plus 50. And also keep in mind, when the NFP numbers hit tomorrow, we had a minus 85 print last month, which really, at the time, shook people's confidence and caused a reasonable retrace on the Euro USD, which was then undone rather quickly. We could see an upward revision on the minus 85 number from last month. So when the number hits, don't just look at the headline number. Look at the revision. A lot of times the revision is the bigger story because they've got more data to support the actual number there. So if that number goes from minus 85 to I think last month they were expecting a plus 15, plus 25 number. If that minus 85 becomes a minus 20, even though it's still a negative number, that is a sizable revision. So we could see a flat number with a big revision to last month, and we could see the dollar go crazy. At the same time, you could see that immediately turn around the equities markets. People go, oh, wow, okay, the global growth story is actually, on. And almost immediately reverse the big slide that we saw today. I mean, keep in mind that when the credit crisis happened and the markets were in free fall, we routinely saw minus 300 days followed by plus 300 days. So even though let's go take a look at the chart here. Here's the Dow. So we made our way up here. This was back in January 19th. We had a big sell-off here, came down. We were starting to trade up again, and then now this is today. And I mean, if that candle doesn't tell the story, I don't know what does. Look back. This is a 6-month chart of the Dow, and look back at how many days we've had that big of a sell-off in one day. And and this was a solid. I mean, we went from here down to here. There's no wicks to the upside or wicks to the downside. This is a solid gray candle that tells us one story and one story only. We sold off, we sold off 271 points in one day. Biggest down day we've had in quite some time. Is that ripe for a retrace back up? Yeah, I mean, good jobs number comes out tomorrow. That could bounce right back up. But I think the story is told that we're sitting on right here on a critical psychological level. If we trade under 10K and close under 10K, we open up, this low here, which is at 96.50. From 10K down to 96.50, that's a 350 point move. We open up, potentially we open up 9.4. I mean, if you draw a trend line that goes up this way, we broke it right here. We haven't even made it back to retest it, and now we've fallen off again. I don't trade the Dow, but I know enough about technical analysis that this doesn't look like a healthy chart to me. Let's go ahead and take a look at an S&P chart. S&P oftentimes tells an even better story because this is kind of like a big mutual fund of the 500 largest stocks in America, whereas the Dow is only 30. Take a look here. I mean, here again, solid down move. One of the biggest down moves we've had in the last 6 months. Not a great story, and this one actually closed below the near-term support. So now, we're looking at the next support here is 1029. So from 1062 to 1029, that's another move the size of today. Bad number tomorrow in the jobs. That could easily happen. And keep in mind, my theory right now is that the equities markets are what are adding to the yen strength and dragging things like USD yen and pound yen down. Could we retrace back, half of this candle in one day? Easily. But at the same time, this is a fairly bearish story, and I think something that you probably ought to begin to watch on a regular basis. Take a look at it and see if you see any correlations. I certainly see some that affect my bias. So equities are not in a great spot right now, and as long as they stay that way, we'll have further uncertainty, and especially in the yen pairs.